Good morning, everybody. Thank you so much for being here for business development. We really do appreciate it. With our new series of really focusing on how you become a business person compared to just getting leads and lead generation, we wanted to expand this, and our marketing partners, all of our title companies, and some of our lenders have joined in on helping us set up these classes. Today is Fidelity National Title's host day, and Jennifer Weller, the floor is yours.
All right, well, good morning, everybody. So Jen Weller from Fidelity. I've got Troy Peterson and Sam Jones here with me as well. And today we have a very hot topic and a very wanted man right now, Mr. Rick Wittstock from IPX 1031 Exchange. It is a sister company of ours. And there's a lot of unfortunate talk that the 1031 exchanges may be gone after this year. So everybody is scrambling to get them done before the end of the year. So I think I've referred more people to Rick in the past 6 weeks than the past 2 years because all the people wanting to figure out how to not miss out on the tax advantages. So we're really happy to have you. Thank you. I know you're really busy right now with everything going on. So Rick, thank you so much for joining us today, and the floor is yours.
Awesome. Well, thanks, Jennifer. Thanks, Greg. Thanks for having me today. And of course, they're always to help out the industry on learning more about 1031 exchanges. Just makes my life a little bit easier. But yeah, like you said, Jen, the market is completely crazy when it comes to 1031 exchange. And there is some rumors and some issues on that things might be changed in the 1031 exchange world. I don't know if do I have shared capabilities here to put up my PowerPoints? I think I do. Hang on one sec. I'm just going to pull up this right here. All right. So can everybody see my screen?
Yep, you got it.
Perfect. Just get that open here. Get all this crap out of the way. One sec. Okay. So yeah, like Jen said, we're IPX 1031 Exchange. We are a sister company to the F&F brands, and that's, as you realize, when we hold lots of funds, that's very important when it comes to 1031 exchange. I manage for Arizona, New Mexico, so any 1031 exchange in these regions, I usually have a lot of my hands on to that. So, but that's my contact information right there. My goal here is, of course, we got about an hour, so you're not going to get a complete understanding, but give you a basic understanding of what a 1031 exchange is, so that you can have that intelligent conversation with your client or out-of-state buyer that is looking to relocate their investments here in Arizona. So I'm also going to give you some benefits of it, and then some ideas on how to use a 1031 exchange. And then towards the end, we're going to cover some of the tax updates on some strategies and what's happening in Washington when it comes to reforming possibly the 1031 exchange. So I like to always start it off with the 3 types of properties that we're dealing with in real estate on the residential side and commercial side. But on the residential side, we all are dealing with these type of properties, the primary residence. And where things have been kind of bonkers in our state right now in real estate, I've been getting a lot of phone calls on primary resident transactions, and mainly because they might have bought just last year. It's their primary residence, and then now it's hard to turn down a $100,000 gain possibly in 1 year, so they want to sell that property. The issue is when you call me, I can give you that information, but I can't handle or help you with a primary residence. You have to follow under the guidelines of the 121 in the tax code, which is that you must live in the property for 2 out of the last 5 years from the sale. So if you just bought a primary residence a year ago and now you're selling that property, you better be prepared to put some money aside to pay the capital gains tax, because you are 1 year shy of falling into this exclusion for primary residence. And then, of course, where it's a primary residence, it doesn't qualify for a 1031 exchange either. So the exclusions, just a reminder for you guys, it's single taxpayer is up to $250, and married filing jointly is $500,000. So that is the gain, not the sales price. So as long as their gain is, those numbers are less, they will not have to pay any capital gains tax if they've lived in the property for 2 out of the 5 years. So that's just a little refresher on that, but that's something I'll be getting a lot of calls on. The other type of property, of course, there is a ton of these in Arizona, and we have a lot of out-of-state buyers that want to buy more of these second home vacation homes. Flagstaff market is, or anything up north, is just bonkers. I probably get at least 2 or 3 calls a day on clients from out of state that are looking to find a property in Flagstaff, Pine, any of those northern region portions of our states. With the second home, though, there's really no tax advantage on the sale, or there is no exclusion for tax on second home vacation homes. So if you own a second home, or your client owns a second home and they have never rented it, and they've only exclusively kept it as their second home vacation home, be prepared to factor in what the capital gains tax is. And like I say, it could be up to upwards of 30% of that gain on a second home vacation home if it was never rented. So what I mean by that is that second home vacation home can also be Airbnb or short-term rental when you're not using it. Claiming that on your taxes for at least 2 years prior to the sale will give you all the benefits of a 1031 exchange, where you can defer that capital gains into another property. So keep that in mind when you're working with anybody that has a second home, or it's their second winter home here, that they're snowbirds, any of those properties. If they haven't rented it out ever, even if there's a family member in there, that's okay. It would count as income if they claim it. So the most important thing on a second home, if you want to get the advantages of 1031, that you have to have that property claimed as an investment property for at least 2 years prior to qualify. And then, of course, that's the hot topic button right now is 1031 exchange, is because all these gains that your client or yourself are getting in your properties, you do not want to pay that capital gains tax. You want to leverage the equity in it to buy more properties. And then that's where the 1031 exchange comes into play.
Rick, I have a question. On the vacation homes, is there any stipulations for how often or how percentage of the year that they need to rent it out?
There is definitely limitations on it, so it's not the perfect solution. But if you have I have a property up in Prescott, and I started off because I knew I was going to sell it a couple of years down the line, so I set it up on an Airbnb, and within 2 years, and last year, of course, with COVID, it's just been crazy busy on my rental. But the minimum requirement is that you have to only rent it for 14 days a year. And then you're limited to 14 days a year that you can stay in the property if you go with the minimums. If you rent it out more, then you can use it more. There's also some area there too, as far as maintenance involved, that doesn't count against the property being used. So you pretty much, if you're renting it out 6 months of the year, you can use it 2 to 3, maybe even 4 weeks of the year as your personal use. So that's not a bad deal. Most people only use it that much anyway. If you're up there every weekend, well, then maybe Airbnb or renting it out may not be the option. But this is only for if you're preparing to sell it and not want to have to pay the capital gains tax. So you can keep it as your personal use. When it gets, you're thinking about you might want to sell it, you want to have at least 2 taxation years prior that you claimed it as an investment property so that you can qualify for that.
Okay.
Very good question. That comes up a lot. Here's the reasons why you would even consider doing a 1031 exchange. And if these numbers are high, wait till I get to the end of this presentation when I talk about what they're proposing to do. So currently, federal capital gains tax rate is 15 to 20%, depending on your taxable bracket for that year that you sell that property. So you might be in a low tax bracket, but you sold a couple rental properties that you made a couple $100,000 on, that could bump you up easily into a higher tax bracket. So don't just assume that you're going to be at the 15% on the federal side. It could be somewhere between the 15 to 20%. And I always like to prepare for the worst. And then if it's a little bit better, then that sounds much better when you're looking at it. So be prepared that it could be anywhere from 15 to 20%. Then based on where the property is located, there is state capital gains tax. So here in Arizona, that's at around 5%, but there is upwards of 13.3, depending on where that investment property is. If it's in California, you probably guessed it, that 13.3 is the state capital gains tax for California. And then there's the little surprise one that some people are aware of and not aware of, is the depreciation of recapture tax, which is at 25%. So say you bought a property a few years back in the height of the market, finally to a point now that it's worth what you bought it for. So if you own it for 5, you're selling it 5 years later for the exact same price that you bought it for. You're thinking, well, I don't have to pay any capital gains tax because my rental property didn't appreciate. I didn't get any money. It's now where it was where I bought it before at the height of the market. The reality is, if you've been renting it out for the last 5 years, you were taking on your taxes, or you should have been, depreciation deductions. So when you go to sell that investment property, even though the sales price doesn't look like you made a gain, you have an advantage that was on your tax return for the last 5 years, and the IRS wants a piece of that back at 25%. So keep that number in mind there as well. And then the last tax that you're taxed on for the investment property, for the gain or the primary residence, is the PPACA tax, otherwise known as the Affordable Healthcare Tax. And that's a federal tax that's on the gain on any property in the United States at 3.8. So if you look at the number 15 to 20 on the federal capital gains tax, some CPAs will give you 15 plus 3.8. So they might say your capital gains rate is going to be at 18.8 to 24%, because they're just factoring in that PPACA tax on top of that. So any questions on that? Because if those numbers look high, wait till I tell you what's being proposed later. Okay. So here we go. These are just some of the reasons why you would even consider doing a 1031 exchange. And this one is a huge one right now if they can find the inventory for it. So I have a lot of my clients that are residential, had 2 or 3, 4 single family rental properties, and they're looking at getting out of that. They want to have more of a multifamily, maybe industrial, some commercial properties that in their mind might be a little bit easier to manage and then have all that source of income coming from one particular property instead of multiple properties. So there's when it comes to exchanging, like kind is very broad. So single family residential can be exchanged into a commercial property, or vice versa. Your commercial property can be exchanged into residential properties. And the other one that it can be exchanged into is raw land. So all of these types of properties, as long as it's real property and it's held for investment or productive use, it's considered like kind. So there's a huge swing from residential to commercial. And then there's another swing that's going from a smaller, lower level commercial under 5 million, and they're making the leap into maybe a 10 to 15 million dollar commercial property. Or if you're counting units, they're just upping their units when it comes to multifamily. So keep that in mind, that is something that maybe your residential client may want to exchange into a commercial. If you don't handle commercial, of course, you can reach out to your title people or your broker to get a referral for a commercial agent that will obviously help you and want to pay you that referral fee. So don't kill the deal because of that. The other one that is a trend that I'm seeing, and this one is more the gun-shy investors that were back in 2005, and they invested everything they had into real estate in one market. Maybe that was in the Phoenix market, or maybe that was in the Florida or the Nevada market. They, of course, as you know, the market crashed and some of those areas got hit harder than others. So a new trend is where they're buying properties in multiple states, so that if there is the downturn, some states might not get hit as much as others. So you're diversifying your portfolio. And of course, with technology, having rental properties or investment properties in other states, it makes it a little easier with some of the technologies that are out there now for managing those properties. All right, this is what everybody normally wants to know, is the timeline on a 1031 exchange. So there's a few different types of exchanges. The one that we deal with on a regular basis is the delayed exchange. Sometimes they call it the Starker exchange or forward exchange. So these are, depending on how long you've been in the real estate business, you might have different names for it, but the official name is a delayed exchange. And the timelines for a delayed exchange is and starts at the sale of the relinquished property. So the relinquished property in our world that's the taxable property or the investment property. So when the exchanger or the investor sells that relinquished property at the close of escrow, the funds go from the escrow directly into a qualified intermediary or QI or accommodator accounts, because it cannot go to the seller. And it can't be held by escrow. It has to be held by a third-party company like ourselves that manage that. So once those funds go into the QI account, they're held there until you find that replacement property. And the timeline for that, or the biggest one that is kind of a little bit intimidating right now in this market, is the identification timeline or the identification period. So this starts at the close of escrow of that relinquished property. So that's your day zero. And then it's calendar days, not business days. You have up to 45 days from that close of escrow. So it counts holidays, so like Labor Day, any holiday that falls into that 45 days is counted. So 0 to 45 to identify. And that's the most crucial part of the exchange, because if you don't identify a property in that time or that window, it doesn't matter that you have 180 days to finish the transaction. You need to have that ID property within the 45 days. So you can ID 1, change it. You can have 10 that you're looking at, 30 that you're looking at, as long as you narrow it down or give us a list up to 3 within that 45 days. So you're looking at this screen and you're saying 45 days in this marketplace, that's crazy. How are you ever going to do that? Well, my personal tip that I would suggest to you, and you can suggest this to your client, is the only thing that you have control of timeline-wise is the sale of that relinquished property. So your taxable property, you got 2, 3 offers on the table, maybe more, and you're looking at which one you're going to choose with your client. Look at the one that's going to be the most flexible on the closing dates. Maybe it's a few $1,000s less, but if they give you some flexibility, maybe a longer closing, or that their closeout in 40 days on the sale, and if they'll give you an extension that possibly from there, that will give you more time before the official clock starts. So say you got 45 days from the sale of the relinquished property, close of escrow happens on September 30th, that's your day zero. But you've already had 2 properties that you have that you're considering, and 1 you're under contract with. So instead of IDing an address or a parcel number, you're actually just going to show us the contract and here's what you're going to close on. So a lot of my clients are actually closing within that 45 days, just based on the current market that we're sitting in. But officially it starts at on the close of escrow, and that's your day 0 to 45. Any questions on that part? All right.
Hey, Rick, it's Troy. I'm just going to jump in real quick, kind of back to the point on commercial agents and stuff.
Right.
A lot of the agents on here probably know this. You guys have an internal commercial relationship, and Greg or Sandy might follow up on that. And I think I even saw Jim on the call, Jim Z. So if you didn't know that, you have within your brokerage a relationship with commercial. So just keep that in mind.
Very good point. Yes. So that's something you should access on that side of it for sure, and work back and forth. So with that ID period, that is the challenge in this marketplace, is to officially identify the 1031 exchange property. So as you can see, it has to be in writing, signed by the taxpayer, and then sent into the QI or qualified person. My suggestion on this is, like I said, keep a list with your client. When it gets closer to the 45th day, then like say the 43rd or 44th day, narrow it down to 3, and then provide those 3 to the qualified person. Otherwise, you're just going to be sending one in writing, then you have to avoid it, and back and forth and back and forth. It's a lot more paperwork for everybody. So just keep that list. You can have as much as you want with your client, and then just narrow it down when you get closer to the end of that 45th day period. The other ID rule is one that confuses a lot of people. So there's that 3 property rule I just described, which is the easiest and most popular one with agents. It's because you just have to have 3 units. It doesn't matter what the value is. This other one, the 200% rule, it's not what you can buy. It's an identification rule, but a lot of people look and interpret that as like, well, is that a limit on how many properties I can buy or a dollar I can buy? Same thing with the 3 property rule. Is that the limit? I can only buy 3? And the answer is no. You can buy as many properties as you like on the replacement side. And these are just 2 ways about identifying it with your QI. The 200% rule, like I said, is a little confusing, but really what it is just 2 times the gross sales price. So if you have a $500,000 investment property that's under contract and closing, when you're doing a 1031 exchange, that gives you up to $1 million cap that you can identify. So you can identify 10 $100,000 properties, 5 $200,000 properties, and that just gives you a little bit more properties that you're identifying versus the 3 property rule. So if you're looking at buying multiple, the 200% rule might be the one to go with. Now, a good QI company like ours will help you and guide you through this whole process. This is just to make you aware of the 2 types of ways to identify. And then there's a third one that I'm not going to talk about too much today, but that is let me go back one slide. That is the one exception. And that's basically if you go over and above the 3 and you go over and above the 200% rule. So you identified more than $1 million in my example, and you identified 4 and say they're worth 1.2, as long as you're going to buy all 4 of those properties, you still can save your exchange and still complete it. So we'll walk your client or yourself through these, but keep that in mind. And again, the most popular one is the 3 property rule. Okay, so what is like kind? Well, I told you in the beginning, it is all over the board. As long as it is real property, it qualifies. So again, you can go from a piece of raw land to a rental property, residential or commercial, or you can go into fractional ownership or share of a commercial property or fractional ownership of residential property. As long as it is attached or has a real property to that, it qualifies. So there's a huge long list of what some of the odd ones are. And there's the water rights, mineral rights, anything that is under lease for 30 years or more qualifies for 1031 exchange. So some of the odd ones that I've done in the past, I've done gold mine claims, I've done billboard sales and satellite sales. So all 3 of those sound like they might be personal property, especially the satellite towers, but sorry, not satellites, cellular towers that could be personal property, but as long as they're attached to an easement or to land, they are considered like kind. So you can exchange from a cell phone tower to a single family in Scottsdale that you're renting out Airbnb. So as long as it has or is claimed as real property, it counts as like kind. So then this breaks us down to what the process is when we set up a 1031 exchange. And this is where you want to get with your QI earlier than later. As soon as you have maybe that call from a client that is looking to set up a property for sale that is an investment property, that's when you want to start having them have the conversation with their tax advisor or somebody like myself to kind of give them a path where they want to go with it. Right now, if the current market, we're getting a lot of last minute transactions, and we're kind of known in the industry that we can pull those off with the way that we are set up, that we can do last minute transactions, but we tack on a small fee for doing that if it's within 24 hours. So at least get that information, or at least have your client talk to the right people for what their options are before they get to the closing table. So basically, once you have that property under contract, that's when we officially get engaged to do a 1031 exchange. And then we start reaching out to escrow to get the documentation that we need. And then we start sending out our documents to your client to set up the 1031 exchange. And there you again, don't wait till the 11th hour. So that's kind of the overview of what a 1031 exchange is. And I'm gonna stop sharing here and kind of cover some of the other topics that are currently going on. But before I do that, does anybody have any questions on what we just went over?
Yes, Rick, I have a few questions. So okay. You explained that the exchange is pretty broad, but I think it's easy if you tell us what it's not. In other words, you can't exchange personal property with an investment property. Is that correct?
Right. So the only thing it's not is your primary residence. So right. Anything that is investment, that's real property, is exchangeable to one another, other than primary residence. But there's a little bit of a gray area there, because you can actually down the line exchange into your primary residence or your dream home or your forever home.
Right.
So,
but generally speaking, if somebody owns one property, they don't have an investment property, and they sell their primary residence and they buy something, that's not a 1031 exchange, right?
No, that's under the primary exclusion. You get the right. 2 years out of 5. Yes.
So the next question is, and this affects our clients a lot. So if they're
right.
if they're not doing a 1031 exchange, right? Like Rick said, it's $250 for the first capital gains for a single. It's $500,000 for an individual. When that person buys a house for $300,000 and they sell it for $1 million, primary residence, lived in it, to the last 5 years, but they remodeled their house and they spent all that money, does that add into the equation of trying to get that capital gains under 500?
Right. No, that's a good question. I can't give you a definitive answer to that because you have to go through your tax advisor. But general answer to that question is if it's a capital improvement to the property, that will adjust your basis. Right. So when you're calculating your capital gains tax, this is tax lingo. It starts with your basis, which is your sales price. So if you bought that property, what was your example? 300,000.
I said 300. Yeah.
So you bought that property for 300,000. That's your starting point to your basis, and it can go up or down based on two things. Where it's minus the 300 is the depreciation number that you take on your taxes every year. So that's minus from the basis. Okay. The other is a plus on what you suggested, Sandy, is any improvements you've done to the property. So if you've done a capital improvement, you had addition to the property, or you added a pool, any of those type of things that you had to get a permit for and you had a capital improvement to, that's added on top of the basis. So let's just say it was a pool. You bought it for 300,000. That's your starting point to your basis. The pool's 100,000. So going forward, now you're at 400,000 is what your basis is.
Right.
And then if you took 50,000 in depreciation, well, that'll drop it back down to 350. And then if you sell it for 550, you have a $200,000 gain that is subject to tax or deferred if you do the 1031.
So our advice to our clients is, especially if they're going to do improvements, they need to save all their receipts and all the documentation, because that adds up. All right, I'm just going to say two things to everybody. We are not 1031 exchange experts, and we really, when it comes to selling real estate, we don't need to know all the gritty details. We just need to know it's out there, and we just have to be careful how we start suggesting and what it really involves, because it does take on a different twist for everybody. But just know, more important, that we have to go through the intermediaries, and Rick's the guy to call to do that. But just be careful that we don't give out too much tax information or too much 1031 information, because we tend to over-service our clients and give out information. And the last thing I'll say is when we write contracts, all we're required to do is to disclose that the sale is going to be, or the transaction is going to be a 1031 exchange. There's no cost to anybody. We're just required to disclose that. That is it. There's nothing else that we as realtors have to do other than disclose it and make sure that our client is talking to Rick about the exchange. There is zero that we have to do, and it doesn't affect the appraisal or the inspection or the paperwork, just a disclosure.
Yeah, absolutely. I 100% agree with that, because that is where you start drawing in the sand that you're going to be the tax expert and giving that advice. You're the licensed entity in here, so anything that you say to your client, even if it's the best intention, if it's incorrect on the timelines when it comes to 1031, or you simply state that their capital gains tax is only 15% or whatever number you express with them, that can come back at you. So always direct them to their tax advisor or somebody like myself that answers those questions for them and puts them in that position. Of course, knowing some of the basics, like Sandy said, is helps you set you apart from your competitors when it comes to real estate. And then legally, all you're obligated to do is disclose. It's a special addendum under the Arizona real estate forms that simply just states the seller may or may not participate in a 1031 exchange. And you're fully disclosed by saying that. If you want different words or different verbiage on that on addendum, I can provide that information to you. And it doesn't have to be disclosed up front. It can be disclosed anytime through the process, but the sooner you disclose it, the better, so that everybody is on that page. There is no contingencies, like Sandy said, as far as delaying the sale. The monies that's in the exchange account is liquid, just like if it was in their own personal bank account. So keep all that in mind. And where there's a big trend for a lot of out-of-state investors coming to our state, they may be working with a qualified intermediary out of another state. I get a lot of these calls recently that they're having communication issues with maybe another QI from another state, and they're not clear on some of the rules. Feel free to call me and ask some of those questions. I've had other agents do that, even though it's not my personal deal. We just want to make sure that your client is having successful closing. So even if it's not myself that's handling that transaction, don't feel that you have to stick with that. If you can have some questions, you can call me on that, or my office on that as well. So,
hey, Rick, a question to that. You know, I did a 1031 with you up into Washington. So the question would be, what states can you come from or go to?
Anywhere. I can handle exchange anywhere in the United States. It's like I say, there's other companies, of course, out there, but if you have a client that's coming from New York and exchange or want to buy a property here in Arizona, I can handle that exchange. California, anywhere in the United States. And then they can exchange and do the replacement property anywhere in the United States, including territories like Guam or Puerto Rico as well. So other than Rocky Point, for some reason, that one still is considered. A lot of people think that that's Arizona and they can exchange there. I have two right now that I'm working with. And I don't know how to tell them, but it's not United States. Rocky Point is not United States. They just want it to be so they can exchange into a new condo down there on the ocean, but they can't use 1031 to do that. So some of the other things that are a little bit more technical that are coming up right now is because of inventory, we have a huge demand for reverse exchanges. So this is one that is a little bit more advanced as far as what we just covered was the basic forward exchange or delayed exchange. The reverse exchange is way more complex, but it is very popular right now because it does one thing. It allows you or your client to buy that replacement property up front. So they can buy a property under reverse exchange. So you have to get with your QI right away when they're considering doing this, to buy a property, say in Scottsdale, and then they might have a rental property that is in Washington State that's not even on the market yet. They even have tenants in it, but they want to find their replacement property before they sell the relinquished property. That's a reverse. And some of the positives to that is that the timeline goes in your favor. So if you did find a property in Scottsdale under that example, that gives you 180 days to sell their Washington investment property and then normally exchange into it. So that is why it's popular, because you can look for it without that timeline, find that replacement property, do a reverse exchange, and then have 180 days to sell your investment. Now, the downside of that reverse is the cost. They start at about $6,500 to do one of those. And you pretty much have to buy that replacement property that you're buying up front cash. Because what we do is we create an LLC. We call it officially an EAT, but it's an LLC or an entity that acquires that property because the taxpayer cannot. And then we hold that property under that LLC for the full 180 days or until you close the relinquished property, their investment property. So that's why it costs more. There's a lot more moving components, a lot more liability for the QI company. And for the lending side of it, it's a brand new LLC that acquired that property with no credit history and can't have any recourse on the loan because we're on that member as an LLC. So hard money or cash is the other option to do that. But it is, like I say, it's doable for the right property. And if you have a huge taxable gain, that $6,500 is tax deductible, and it makes sense sometimes to do that. Another one that's very popular is the reverse improvement or reverse built to suit exchange. So that is where you would buy property that needs to be fixed up. And you want to use the funds from the 1031 exchange to do that. You can start it off as a forward exchange and then identify the replacement property, then switch it to a reverse and acquire that under that LLC. And then you have 180 days to repair anything that needs to be repaired under that reverse improvement exchange. So that one's very popular, and that's an option. And again, this is just surface. So if you have clients that are coming up with this, have them reach out to me, or we can set up a call to talk about it more. But just know that that's available to create some inventory if they want to build a new one, or if they want to improve a property that they're looking at to buy. The build a new one from the ground up within 180 days is a huge challenge right now in this market. So you'd want to look at figuring out the timeline before you do anything on that particular type of exchange. Any questions on that? All right, so then I'm going to cover briefly here what's happening in Washington as far as 1031 exchange. The fight is started again. 2017, if you were on my mailer list, you probably got an email from my company or myself on send a letter to your local representative to save 1031 exchange. So in 2017, our industry had the hugest fight with Washington on saving and keeping 1031 exchange in the tax code. And as you know, we're beyond 2017, so we won that battle. We took a couple lumps. So what they did change in 2017 was they reformed personal property. So before I used to go to Barrett-Jackson and I would do an exchange on automobiles, we do exchange on airplanes and fine art, anything that had appreciation value on a personal level. We were able to do 1031 exchange prior to 2017. That has been reformed and gone. So sometimes that is on commercial transactions or Airbnb transactions. That personal property that's included, like the furniture, cannot be on the real estate contract. It would have to be separate bill of sale, especially if they're doing a 1031 exchange, because that portion of the value of that personal property could be taxed as boots. So what's happening in Washington right now is another fight. We've already know how to fight and educate Washington now. So it's not as crucial as it was in 2017. A lot of the contacts that are in Washington on the Democratic and the Republican side are familiar, and we've been educating them since 2017 on 1031 exchange. And there was recently, about a week or so ago in the Senate, there was a verbal vote if they were going to add 1031 exchange reform into the proposed bill that's supposed to be hitting Washington in October. And the vote was to keep 1031 exchange the way it was verbally. So that doesn't mean that the fight is over. It could still happen. And what's being proposed from the current administration is not a complete reform, so it won't go away. They're going to do very similar to what it is in personal properties. What's being proposed is that the gain has to be 500,000 for to qualify for 1031 exchange. So they're capping 1031 exchange. If your gain is 500,000, you would still qualify if this proposed bill happens. If your gain is 600,000, you will have to pay capital gains tax on that difference, the 100,000. So even though if that proposed does happen, it will affect the market, of course, not so much in the residential, but more in the commercial side. So we still don't want that to happen, and it's the fight's not over yet. If we get beyond October and it's not on the bill in October, then we can take a little breath and breathe that things are going to stay the same. So if you want to support 1031 exchange, our website, ipx1031.com. There is a link there that you can link up to. You can be on my monthly mailer, or you can go on there to click a link, and there's a pre-written letter that goes to your local representative to let them know to keep 1031 exchange. Any questions on that side?
So you'll still have a job no matter what in January.
Yeah, exactly. I'll still have a job come no matter what happens.
Okay, good.
But if it doesn't happen in October, we're going to be going into midterm elections next year. So we're pretty positive that things are not going to change when it comes to completely getting rid of 1031. But what is and probably will happen in that bill in October is and that's why a lot of people are scrambling to sell their investment properties now, is because the capital gains tax is going to go up. So what I showed you in the slide earlier, it could double. What's being proposed is 43% capital gains tax from the Biden administration. Where the bipartisan support is coming in, it looks like it might be more like 28 to 30%. So either way, it's going to be either 10 or 20% higher than what you're currently paying in capital gains tax. So that's on primary residence, that's on second homes, that's on any real estate or any asset that has a gain. It's going to go up to either 28 or 43 or somewhere in the middle. What we're hearing from Washington from our lobbyists is that's a given. It's going to be raised. We just don't know what the number is. The other thing is the corporate tax rate on that bill. That's going up. We don't know what that number is going to be, but those are two things for sure that we know in taxes that are going to change on that bill in October. Doesn't mean it's going to get approved or anything. That's just what's being proposed on that side of things. Any questions on any of that?
Can you repeat, if that bill gets put up in October, when that would take effect?
Yeah, that's the other side. There is some rumors that it might be retroactive, and it might be all the way starting from April of this year. So any sale from there could have the new capital gains tax put on it. But that would piss off a lot of people if they did retroactive. So more likely it'll be, if it does get approved, it'll be January 1st. But we don't know at this point if that's going to happen or not. But that's kind of the side of there.
Rick, there is a question in the chat here from Jay. It's not necessarily related to that specifically, but I have a listing where the seller needs to occupy her home for 2 to 4 months after close of escrow. Just wondering how to best position her listing to attract 1031s.
So seller needs to occupy the home for 2 to 4 months after the close of escrow. So leasing it back, the property is what that sounds like. So yeah, that's a good question. So the 1031 exchange, they would be the property that they're going to occupy back. They're going to stay and maintain it for 2 to 4 months. And then the exchange would still carry forward. The only thing there is, of course, you would still have to follow the timelines to find that replacement property after the close of escrow. Living in the home that you sold, I don't think that would be a problem. That's going to be more on the buyer's side on how they claim that, but it shouldn't affect you or your client on that because they're just doing a lease and then until they find the replacement property. But verify that with your tax advisor, Jay.
And I think maybe what Jay is saying, he's trying to position the listing as an attractive property for somebody that's looking for a 1031 purchase.
Oh, they have the tenant stay in the property?
Identify, you mean? Maybe to identify a property? You know how you have to.
Jay, you're online. You want to clarify that? Yeah, maybe that. If it is a question that's on that guards, just let me know. But if it is, and there is a lot of my looking for properties with tenants in it. And that.
I think Jay's unmuted now.
Yeah, I just want to know if she's elderly and she needs the cash out of her home and have 3 or 4 months to occupy it so she can buy her new property for cash. And I'm just wondering, you know, if there's anything on a marketing spend that I could put in the listing that were 1031 friendly or something of that nature. Thank you.
Right. So that sounds like it might be her primary residence then?
Yes, it is her primary, but she's not trying to do a 1031 personally. I'm just saying from a marketing spend, what could I do to let the investors know we're friendly?
Right. Just that. I would put that in the description that you are friendly for 1031 investors because there is a lot of my investors and clients that's what they're searching for is that. So where she's willing to rent back for 2 to 3 months to an investor, that could be a positive. And to, like you said, Jay, just to have it in the listing, say 1031 friendly is good too as well. Because there's a lot of my clients right now, they're confused a little bit as far as listing the property and finding the property. Does it qualify for 1031 exchange? Some of those questions are valid, or some of those are just because they're not knowledgeable enough what that may or may not be. So spelling it out for them in the listing could drive some more traffic there for that property listing for sure, Jay.
Thank you.
Yeah. Is there anybody else working on a 1031 exchange or getting those questions? If maybe you're a little shy, don't want to have the conversation, I'm always available. My contact information, I can put it in the chat. The phones are just off the hook for us these days, but if you got a quick question, you can definitely text me. This is the number I'm going to put on here is my cell phone number. So if you don't reach me, text me. If it's like, hey, what's those timelines again, Rick? I can get that information to you pretty quickly via text. If it's something more detailed that you want to have that conversation with your client on what their options are, you can call randomly during the day, or you can schedule a time with me and I can set up a conference call with your client, their CPA, whatever that needs to happen on that side of it. So use me as a tool that can help you. Like Sandy said earlier, don't get in the position where you're going to be the expert. Just know enough and the people to talk to that can help you walk you through all those situations.
Hi, Rick. Can you hear me?
Yes.
My name is Linda Nyquist. It says my son's name on my picture there, but hey, I have, as of today, I'll be calling you after this meeting. I have a double 1031 exchange, buyer coming in and seller going out.
Right.
Anything I need to look out for on that?
It sounds really confusing, but no, it's just going to be cash on the buy side, and then it's just going to be funds on the sale that they go into exchange, and then they go buy the next property. So nothing too complicated. But what I would always recommend, if you are the listing agent on that situation, to verify funds. Qualified intermediaries can provide you what's in the exchange accounts.
I already got that. Yep.
Okay, perfect. Yeah, so that's the only thing I would suggest. Other than that, the transaction should be fairly smooth.
And as far as the seller going into a 1031 exchange, He's going from a $200,000 property to a $1.2 million property. Any issues there?
None at all.
Okay.
Good
All right,
jump.
great.
Yeah.
I'll call you later. We'll
All right. Sounds good.
got some details. Thank you.
Perfect. Thank you. Any other questions or anything like that while we're still online? I just put my cell phone number in the chat. Hopefully everybody got that. Of course, you can reach out to Troy, Jen, your title rep to, if you need my contact information. The other thing I recommend too is if you email your client and copy me in on the email as an introductory, that's a good way to start, because then I can reply back with some basic information for them to review, and then get started from there too. So that's a good way to introduce as well. And again, like I said, if you have other QI companies coming in, like we were just talking about, if you have questions on that, feel free to let me know that as well. I'll put that in here too. Looks like everybody wants to know my email. I'll write that in here one sec.
Well, I'm very happy to know that you're going to still be around because you've been doing this a long time. So, oh, you're on mute. We can't hear you.
Yep, sorry, I muted there. Yeah, I'm happy to be around too as well. Hang on, I'm just gonna send out my email to everybody here. There we go. Yeah, it's even worst case scenario, if they did get the cap approved at 500,000, that will slow us down a little bit, but it still would be, especially if that interest rate goes out to, or sorry, the capital gains goes up to 47%, it's gonna make us crazy busy, so. But that's all I have for you now, unless you guys have any questions or anything and related.
Thanks, Rick. Appreciate it.
Well,
Yeah,
thank
thanks,
you,
guys.
Rick.
Thanks for having me.
Everybody for joining us. All right. We'll have a great Friday Junior.
Hey, before everybody
Greg,
goes,
Sandy?
just one last thing. Thank you, Rick. And everybody, Wednesdays, 9 o'clock, Bagels with the Broker. The classes are just as good. So come, bring your own bagel or bring your own toppings, but I'll bring the bagels. Wednesdays, 9 o'clock. Thank you, Rick, and thank you, everybody.
Thanks, guys. Have a good rest of the day.
Everybody, bye-bye.